I think as we were discussing, PE activities clearly come down. The initial euphoria over the last 2 years saw a lot of deals. All the good assets came to the market, have got funded, etc. A lot of people have gone for an IPO, but that euphoria, of course, rightly so, has died down. What you will see is dearth of quality assets, but a bunch of tier 2 players coming into the market on the back of that euphoria. Right, so you will have guys who not been previously not raised capital previously coming to the market. Smaller players looking to scale up, looking to get that growth capital coming to the market. Yet the deal pipeline or the deal flow from a PE perspective is probably at the lowest end right now. Given the fact that the deal size, most of the PE guys are now looking at larger check sizes, 20, 30, 40 million is now the norm, no more 10 million rounds. And some of these new players who are actually looking for that 10 million round, they're just not enough PE investors for that kind of play. So to that extent, the guys who are sitting with a 20, 40 million dollar check size probably don't have any deal right now to look at. Having said that, I think from a consolidation, I'm jumping the gun over here, maybe from a PE to immediate M&A, but from a consolidation perspective, I think that's going to continue to happen. Most of the larger guys are, cash rich, backed by PE players who have deep pockets, who have the ability to pump in more money if necessary, are on the lookout for acquisitions. They have pressure to grow. They can't do a greenfield project which takes 5 years to even scale up, and that's the exit timeline for any PE investor, right? So they are on the lookout for acquisitions, and some of these smaller players, 2-center or 3-center, chains, or even a single-site hospital, are the good acquisition targets for these guys. So you will continue to see those acquisitions in that field. You will continue to see the consolidation, but at the same time, you will continue to see some new players coming into the market. So while consolidation will continue to happen, it's never going to be like 2-player, 3-player kind of a market. I think healthcare in India is very regional, very micro geography specific, and it's not going to be limited or owned by one single player or 2 player. It's gonna be a fragmented, so to speak, but you'll have large players in every region. Right? You may have 1 or 2 pan-national, pan-India players, but every region will have 2 or 3 key guys who are large enough, who will continue to acquire, but it will be very fragmented yet consolidated, so to speak. Valuations are stacking up, whether it's single speciality or multi-speciality. I think clearly the answer lies in single speciality. I think one of the questions on the panels, etc., was multi-speciality by nature, if you look at, needs a larger footprint, needs a larger setup, which means larger capex. You break it down into services, that's where the single speciality comes from. And the smaller capex can easily scale up, go or have a wider presence, so to speak. Right, so to that extent, single speciality clearly is the way to go. It's not saying that you will not have multi-speciality, you will have, but they will increasingly focus on the complex high-end services, whereas all the services which can easily be taken out of that hospital environment will be done by the single speciality guys who are more focusing on a particular speciality only, right? Over there, then clearly, minute it becomes scalable, minute it becomes, replicable, valuations will always be higher. Right, so PE guys, be it the IPO markets or whichever way, you will see a lot of interest over there. You will see valuations. The minute you have a lot of people crowding for it, valuations tend to move up, and rightly so, because they need capital more often versus a multi-speciality, which is an annuity play, low return but set, return, so to speak. Multi-speciality will grow slow. You will see investments, but large capital being deployed over there. Abraj taking over care. Large outflow, but annuity play, they don't have the expectation of a 3x return over there. They would be happy with a 2x, but they would have the ability to deploy $100 million. How many assets in India can take that? Right, so you will definitely see deals on both, but valuation-wise, single speciality is the where you will see most action and where you will see maximum amount of capital being deployed going forward. Come to, I think, the IPO markets clearly, I think none of the single specialty guys have scaled up enough to hit the IPO market. HCG, for all practical purposes, while it's marketed as a onco single specialty, has fair amount of multi-speciality revenues coming in. Almost 40, close to maybe 50% is actually multi-speciality revenue. So I technically don't classify it as a single specialty. So having said that, all the guys who come to the market, raise capital from the IPO markets, retail markets, are multi-specialty. Single specialty is still, I think, some time away. They need time to scale up. Probably then they still need to prove the profitability point. They're all burning cash right now. They're all behind expansion, right? So the minute they start throwing those profits, the minute they be able to show the large footprint, that's when I think they will probably hit the market. Probably it's still a little early from that perspective. So most of the hospitals have actually come up as a group of doctors coming together, forming the hospital, and then in future raising capital. Now when it comes to consolidation, both the sides will have multiple doctors who don't have much stake in the company anymore, but are the key decision makers or the key drivers to the entire hospital. Without doctors, there's no hospital, right? So when it comes to consolidation, you have doctor egos coming into play. So that's the most difficult aspect that any buyer needs to manage. If I, as a hospital, am acquiring another chain, what stake do the other seller doctors have in the new business? Are they getting out completely? Will they continue to as shareholders, or will they just remain as practice doctors, etc.? That is something that needs to be managed very, very delicately, so to speak. The second key aspect is, of course, the entire reporting that happens from a financial point of view. Certain things are not captured. You are focused on a particular therapy. You are specializing in another therapy. How do you make a marriage of those two specialities? What do you have the common doctors? Do you have the common facilities? Do you have the common, all the service providers essentially? That becomes another critical role in terms of figuring out whether the consolidation will be successful or not. You're very, strong on, let's say, neuro. You're very strong on cardiac. Can there be a marriage? Can you mix and match? Can you bring cardiac over here as well, and I bring neuro in your facilities? All those things play a very, second critical point over there. Third aspect is clearly the costs. Any consolidation, you're basically duplicating, you have duplicated costs. You need to cut down on some duplication so that you get those synergies. It's very difficult, especially in the healthcare market where there's anyway enough churn in terms of the mid and lower level of employees, etc. Same time you have, governments enforcing, cost increases, minimum wages, etc. So all those things then play the third critical role in defining whether your asset will be consolidated successful or not. But the foremost point is the doctor. If you can manage them, I think the rest all things can be figured out. If that you can't figure out, then God help you, I guess. So the challenge in those kind of consolidation on the hospital side, consolidation is you suddenly see, once the acquisition has been made, you will suddenly see the top level executive management moving out. Abraj faced the same issue when they acquired Care. The CFO moved out, their medical director moved out. Suddenly you acquired an asset and you don't know how to manage it. So you need to be, before you get into such situation, you need to be very clear in terms of that. In all likelihood, you will see the senior management moving out. You need to have your own operating team which can come in immediately. That is, I would say, probably the foremost challenge that any acquirer will face and needs to be addressed upfront rather than post-acquisition you'll figure out what to do. It has to be addressed upfront. You need to have that operating team with you who can go and take over that asset. The second is the integration. Abraj Care, there's no integration required. It's a private equity guy acquiring, but it's a strategic deal where, let's say, a DM Healthcare goes and acquires a large setup. The integration becomes very, very critical. You have a different work culture, you have a different reporting system, you have a different way of taking decisions versus here is an asset that you've acquired. They have a very different set of cultural values. How do you integrate it? And mind you, you haven't seen a large acquisition acquisition by any strategic happen as yet. What they've gone and acquired is individual small assets, so it's easy to integrate. So they've not faced those kind of challenges. But the minute you start moving towards those large-scale consolidation, you will see these challenging. It's all management related. It's all about how do you integrate assets into your own fold. So see, from a cost perspective, transaction cost, as I would put it, from a consolidation point of view, you typically have, before you've written that big check of that acquisition, you typically have the legal fees, you have the banker fee, you would have done some form of a commercial diligence on the asset, whether that market where they're present in, whether there's enough demand for that kind of a service or that kind of an asset. What is the pricing power or the paying capacity of the patients in that region, etc. If you would have incurred all those kinds of costs upfront, but overall if you see a transaction cost would be perhaps in the range of anywhere between 2 to 5%, depending on the deal size. If it's a large transaction, as a percentage the fee comes down. If it's a small transaction, the fees of course goes up in terms of the percentage. So typically anywhere between 2 to 5% of the transaction value is what the cost angle will be, apart from the acquisition check itself. So to your second question on the deal size itself, I think it varies, right? In a single specialty where people are still scaling up, the models are very different. A dialysis model will require different capex, onco will require different capex, orthopedic play will require different capex, so it varies. But on the single specialty side, if you look at the varied, at least in the recent times, whatever we've seen, the deal size have hovered between anywhere $10 to $25 million, 60 to 150, at best 200 crores stretching. That's the kind of deal size that you're looking at on the single specialty. On the multi-speciality, of course, it grows much larger. And if it's a buyout deal, then it can cross easily 100 million. Even otherwise, multi-specialty will require large capex. A 250-bed facility will require at least 250 crores for you to set up. So over there, the deal size are larger. So you will probably be bordering 50 million plus transaction size over there. So that's why the kind of funds who are looking at those kind of deals are very different versus single specialty, because the check size is smaller. So the kind of funds who are looking at that is again very different. So I think one of the key drivers for a consolidation play or for any hospital to grow faster is essentially the need. I should reword it. It's the need to grow faster is what is driving the consolidation. If you look at the entire hospital play, break the timeline. For me to set up a greenfield facility, it takes me a year and a half to just to plan out where do I want to set that facility, what should the location be. It takes me a year and a half to design and get all the approvals to even start construction. It takes you 2 years to construct, and then another set of approvals take another 6-8 months, 1 year. Then it takes you to good 2 years to reach a certain level of operations where you've started breaking even. Look at the timeline, you've lost 5 years, right, to create one hospital. And if you're PE backed, you're under pressure because the PE guy has the exit timeline kicking in around that time. He came in today, 4th year, he's gonna come behind you and provide me an exit. Where is the growth coming from? That's I think the key driver in terms of some of these larger chains who are backed by the hospital, PE players, to go after these strategic tuck-in acquisitions, as we call it. You're very strong in this particular region. Can you go in your immediate region, in your neighboring state, go and acquire a facility over there? You're already a sub-regional player. Can you become a pan-India player? Go and acquire a facility instead of you creating a greenfield facility. The other critical factor is the number of smaller players who are there in the market as sellers. Right, so the valuations are not very high. It's cheaper to acquire than to create your own, build your own asset. So that's another key driving factor, which is driving the entire consolidation. I think the last factor would be the fact that the smaller guys have really not been able to scale up. They're struggling with the capacities. They've created a 100-bed facility but don't know how to fill it. It's run by a single doctor who's not been able to create a team around him, etc. So they've clearly struggled to scale up, and that's why they, happy to just sell out and take whatever cash that they're getting. So it's a mix of both growth pressure from the larger guys to go and acquire, at the same time issues with the smaller guys in scaling up, which is leading to this entire consolidation drive, so to speak. So I think, from where the future is going, the way I would look at it is that clearly consolidation will continue to happen. Some of the larger guys will become larger, but will it become a duopoly or 3-4 key players? No. I think on the multi-speciality, let's break down the entire healthcare sector, multi-speciality, single speciality and other services. And in multi-speciality, you will have those pan-Asia, pan-India players, you will have those regional players, and you will have those sub-regional players. Each of these guys strong in their own particular area. So Apollo will continue to be very strong in Chennai or South India market, but it's expanded, and become a national level, but it continues to hold forte in its home market. Manipal, very strong in its own region, but not being able to scale up beyond that market. Narayan Hridayalaya, 3 key pockets of, home market, so to speak, Bangalore, Ahmedabad, Calcutta. But, will it be able to scale up across India? It's a question mark, right? But at the same time, these are the guys, some of the larger guys who will continue to expand, continue to acquire these small, tuck-in acquisitions. So you will continue to see some acquisition over there. On the single speciality side, I think jury is still out over there. I think people are still trying to figure out what model works, what will work, what will not work, how much capital do I require, will there be investors for such a play, etc. So some of the plays will continue to grow. Dialysis is a case in point where you will see a lot of activity. You may not see consolidation over there in the near term, but over the next 3, 4, 5 years, there may be 1 or 2 players who may get acquired. But there's enough opportunity. It's an underserved market. You will see new players also coming up in that region. Come to home healthcare, which is a very emerging market still. Service as a service, those home services have been available for, decades. But in an organized play, it's just been over the last 3 or 4 years that it has come up. Having said that, it's a play where every player is burning capital, right? And there are not too many investors remaining who are willing to write a check just to cover your losses. There you may see some consolidation. Some of the smaller guys getting acquired by the larger guys. I am strong in a particular market, he's in that particular geography, let me go and acquire it. Over there you will actually see perhaps some amount of consolidation already. Next 1 year, 2 years itself, you may see some consolidation. So you need to really break down each of those services, but I think the overall overlaying comment would be that multi-speciality will continue to the way it is. You have regional, pan-India players continue to grow, continue to go and acquire small assets. You will have single specialties, certain single specialties growing, but some of the new age services may actually get absorbed by either single specialties themselves, or they will just get acquired by one of the larger guys. There you may actually see a market which is just 1 or 2 player market, not a fragmented market.